Welcome back. This is Market Sense. We're focusing on select mid-cap stocks which have rallied very smartly. Case in point being Neuland Laboratories, something like 15%, and in the month of December itself, it's up a good 26%. So let's get in the management then. We've got D. Suchet Rao, whole-time director and CEO at Neuland Laboratories, joining in on the show. Thanks very much for being with us, Mr. Rao. Just highlight what exactly is fueling this kind of a movement, because the CRAMS business, we understand, has been performing fairly well. Is the company looking to increase share in this high-margin business?
Absolutely. As to why the stock is rallying, it's difficult to say. It's a possibility that there's been certain investors who've started to see the inherent value of the organization, and that could be one reason. So in my mind, it could be just a situation of supply and demand for the stock. As far as the CRAMS is concerned, definitely, it's a big focus area for us, and we expect that within the next 3 to 4 years, CRAMS will contribute to about 35% of the overall revenues of the organization.
Mr. Rao, let's talk numbers then. How is the business growing? You've clocked around 464 crores for FY13. For the next 2 years, what kind of top line growth are we talking about? Also give us indication on the bottom line, because compared to the 460, 470 crore on the top line, your net profit, boils down to a meager 14 crore. Do you see that improvement happening going forward?
Absolutely. I'm not in a position to give you any specific guidance on what the numbers are going to be over the next 12 to 18 months or so. But what I can tell you is that our focus is really on improving the overall EBITDA margins as well as the profitability of the organization. So I think the top line will continue to grow. We've grown about 17% CAGR in the last 10 years or so. So I do expect a steady growth in the top line, but our focus more is on improving our EBITDA margins as well as profitability.
13 odd percent, which you have been 13-14% past 2 years. What band are we talking about, or what is the target band internally you have in mind you would increase your overall operating margins to?
So you're absolutely right. I think last year we were approximately 13-14%. In Q1, our EBITDA margins already touched about 17-18% levels. So that's what you can expect now as well as in the immediate future. Over the long run, we expect to increase EBITDA margins to no less than 25%.
When it came to the API part of the business, there was that collaboration with Tokyo-based API Corporation. Are you looking at any more collaborations? And how is the API side of the business performing now?
The API side of the business is performing well because we've focused over the last 6 or 7 years. We've significantly improved our focus on developing high-margin products. So we've balanced our portfolio just not on our bread and butter molecules, which are the higher volume products, but also complementing with products which bring significant value to the business. So the API business is doing well because the niche products which have higher barriers to entry have started to take off. And we expect a similar trend in the future as well. The example you mentioned, our collaboration with a subsidiary of Mitsubishi Chemical, which is APIC Corporation, is a perfect example of the strategy of the organization as well, where we are focusing on doing business development with customers where we can bring a lot of value rather than just focus on single product opportunities. We're always looking to integrate with partners where we can offer multiple capabilities, multiple products. That way it's a chance for our customers to consolidate their business, and at the same time, our efforts also start to pay off.
Mr. Rao, as we are seeing that you're changing your mix as far as increasing margins is concerned, and there is also investor interest coming back in your stock. But as I see, your total size of equity is quite low at just 76 lakh shares, out of which 50% is owned by promoters and 49% by others category. Are you looking at or considering any ways to increase the size of the equity so that participation from institutional side may also increase?
Definitely. That's definitely on the table. We've discussed it internally as well. Right now there's no firm plan obviously, but it's something that we definitely intend to do.
We will touch base with you when something on that front comes up, but I just want to dwell on the point that you spoke of with respect to focus on your margins. Now, from the current 16%, not really asking for numbers, but if you could just tell us what the plans are in order to see an expansion in your margins.
See, I wish I had a crystal ball, and in our kind of business, as you guys know, there's a lot of volatility as far as the market is concerned, and as an organization, we are well prepared by taking steps internally in terms of increasing the value of the products that we develop, we launch, focus on cost reduction, significant investment and focus onto contract manufacturing business. So I can assure you that we will definitely hit our targets of reaching our 25% EBITDA margins, if not higher. What the exact time frame is going to be, it's hard for me to say, because there are a lot of variations in the market. We're affected by the prices of our solvents, consumer behavior, the dollar exchange rate is a big factor. So taking all these factors into consideration, the confidence I have is in our ability to manage our margins. What I can't do is give you some kind of a forecast of what you can expect in terms of exact top line as well as profitability.
So your market cap currently stands at around 271 crores, which has almost more than doubled in the last 1 year. Tell us, what are the investors which have shown interest to you, or you have had meetings with in the last couple of months?
I think what's happening is, as the stock has been progressing well, people have been seeing the company consistently perform over the last 8 quarters or so, both in terms of sales as well as profitability. I think they've gotten curious and started to look deeper into the organization, and as a result of that, I think they've started to see what the inherent value of the organization is in terms of the change in the product mix, in terms of the EBITDA margins, in terms of the gross margins. So I think what we are seeing today is a result of our investors starting to see the results of all the efforts we've put in the last several years in terms of the new businesses that we've invested in, as well as the underlying business itself becoming profitable. Our older products, where we've gained market share, we've consolidated our costs and established a dominant position globally for our key products. So I think it's a combination of everything, and investors starting to see that, yes, that the company has put the efforts in the right place, and they can expect to see consistent performance now as well as in the future.
Okay, we'll leave it at that. Thanks so much then for taking time out and joining in with the fundamental prospects of the company going forward, what the areas of focus are, and of course that stock has certainly been on a tear.